In today's episode, we focus on Ethereum, often tracked through ETH or ETH proxies. After the heavy selling wave in late July, Ethereum has entered a stabilization phase. Prices are consolidating in a healthier range, forming higher lows, and setting up a potential rotation back into leadership as Bitcoin dominance peaks. The ETH to BTC ratio, a key indicator of whether altcoins are ready to join the rally, has flattened and is showing signs of turning up. That shift historically precedes broader participation across the altcoin market. Visit tickertradernews.com for daily stock picks and deeper market insight. Fundamentally, Ethereum remains the backbone of decentralized finance, NFTs, stablecoins, and smart contracts. Despite volatility, network activity remains robust. Daily transaction volume is steady, gas fees continue to generate revenue, and confidence in Ethereum's role as the settlement layer of web is intact. Staking participation is another strength. With staking yields in the mid-single-digit percentage range, investors not only gain exposure to growth but also receive yield, making ETH a hybrid growth plus income asset. Many millions ETH are now locked in staking, demonstrating sustained conviction among long-term holders. Adoption trends reinforce this story. Layer 2 scaling solutions like Arbitrum, Optimism, and Base are seeing record growth. Every transaction routed through them still relies on Ethereum for security and settlement, which ultimately accrues to ETH's long-term value. Looking ahead, three catalysts stand out. First, the potential approval of spot ETH ETF. Even if approvals don't arrive in 2025, anticipation alone is supporting inflows. Second, Powell's Jackson Hole pivot toward friendlier rates improves liquidity conditions for risk assets, historically a tailwind for Ethereum. And third, Ethereum's own network upgrades, especially proto-danksharding or EIP 4844, promise to lower costs for Layer 2s and further cement Ethereum's role as the infrastructure of choice. Of course, risks remain. Regulatory uncertainty lingers, especially around whether ETH is classified as a security and whether staking might face harsher scrutiny. Ethereum still tends to follow Bitcoin's price action closely. If Bitcoin retraces, Ethereum will likely move in sympathy. And competition from other Layer 1 blockchains like Solana remains real, even if Ethereum has the unmatched advantage of institutional trust and recognition. Our Analyst score currently puts Ethereum in a strong buy zone with a medium risk level. Why investable? Because Ethereum offers asymmetric upside on ETF anticipation, Layer 2 adoption, and friendlier macro liquidity. For many, ETH remains the anchor position in a diversified crypto sleeve. Disclaimer: this podcast is for educational and informational purposes only. It does not constitute financial advice, investment recommendations, or guidance on trading. All views are those of the presenter. Listeners should conduct their own research and consult a licensed financial advisor before making investment decisions.